Hey folks, welcome to Weekend Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, April 20th through Friday, April 24th, 2009. Well, folks, again, quite a week last week. It was options expiration. The volatility was out there in full force, and really we saw a light volume float higher almost every afternoon all last week. Really climaxing with Friday's move up into the close, but again, you can see here on the chart, this is Thursday, this is Friday, and look at the move up on Thursday into the close with a little minor sell-off, and the same thing again pretty much all day on minuscule volume. Almost no volume in the markets last week. There were a couple bursts here and there. A lot of the volume came late in the day, and you can see the volume here in this final candle of the day on Thursday, in the final two candles on Friday, the biggest volume candles of the day. Both happen to be red candles, which signifies more selling than buying. And there was a lot of talk last week about how everything is so rosy, everything is great. You had earnings beaten by pretty much every financial company, whether it was Citigroup, whether it was JP Morgan, whether it was, you name it, Goldman Sachs, even General Electric in many ways. The positive news out there for the financial sector was very, very good. Now, the question is, how does this make the market react next week? And I want to talk a little bit about that. I want to talk a little bit about the overall financial areas of the market, the technical levels as well. In addition, let's talk a little bit about what the market did for the most part last week. I'm going to show you the 120-minute chart to start off. We're going to flip to that. And what you can see starting really late March, here you had a little bit of a pullback going into late March, but ever since April started, you floated higher. Really, last week was a higher market week for the total week, and I want to talk a little bit about that as well. But as we get into things, there's some trend lines here I have drawn in, but we're going to start out on the intraday spiders 10-minute, the SPY on the 10-minute. Here you can see the yellow line trailing up like this. That's my 20 moving average, the 50 in orange, and the red 200. Now, what this is showing us is Friday's market activity, Thursday's market activity, very, very much the same. Again, the light volume really controlling things, and what you see here, folks, is all my trend lines. We do trend line technical analysis. That's really our feature, in addition to price, pattern, and time. We don't worry about the other technicals like stochastics, RSI, MACD, and the reason why is because they do not work as well as this. It's been proven over and over again, and the key is anything that can be done by a computer, anything that can just be recognized or calculated, too many people focus on, and when too many people use it, it doesn't work. It doesn't work nearly as well. Now, sometimes RSI, yes, it can show you overbought, oversold, but remember, that can last overbought for a long period of time. Someone that enters in the beginning can be squeezed out by the time it ends, and that's really the crux of the situation, why we focus on these, because these will tell you, these pinpoint the highs and the lows on the market, just like this, folks. This level up here at 87.60, 87.75, right up here with the market, this was a key level that if you knew you could possibly go short for a pullback into the close. We capitalized on that on the chat room by buying a little FAZ for that pullback into the close in the markets on Friday in the chat room. That was fantastic play, absolutely fantastic. Now, let's talk about what we saw. Again, Friday the market actually gapped slightly higher but came down to settle at this 86.60 level. This 86.60 level prior to the move up on Thursday here was the previous high, and I can go back and show you. All these key levels are very, very important. And notice that orange line coordinates right here at 86.60. So we're getting these levels by analyzing the previous day, week, month, and all these levels that I've drawn in my charts are absolutely intricately woven to this market. And that's why they're so important. You can see everyone has a key level. For instance, the market gaps up right here, pulls back. Where does it pull back to? 86.60. Where do the next couple candles, lows and closing areas revolve around? 86.60. Once you break that level, you pull back into a green line, which happens to be a major line as well, right at around the 86.20 level. You focus on that, multiple candles here before breaking back above 86.60, consolidating right here, and then finally breaking up. Now, this 87.65, 87.75 level that we hit at the highs, I'm going to show you why that's important. It's what I refer to as the Great Wall of China, number 2. Now, we had a Great Wall of China right around the 80-81 level on the spiders. Now we have a second one here, which is going to be a major level to watch. Now, if you look at your 60-minute chart here, see this level up here, this is that 87.65, 87.75 level again drawn in on this 120-minute chart, and I'm going to scan back and show you why it's so important. We're going to scan all the way back to the beginning of February and late January, and look at this level up here. Notice how the market rallied up into this point, pulled back, drastically, then rallied up into it again. This is that same level that we're hitting right now and that we hit. So you know from a technical analysis, trendline analysis, that that level is going to be a major level. That's why it was such a good scalping opportunity on Friday. Now, what do you know about that? Again, after it hammered on these levels for multiple times, it failed and fell all the way down to where we hit the lows in late February, early March, and you can scan all the way here and see the market coming all the way down. Then we made our lows, folks, and that's when we started to have this massive rally that's really taken the markets, the S&P, the Dow, the NASDAQ, up about 30% off the lows in the last 5 weeks. Really a tremendous move. I mean, unbelievable move in these markets. Now, the question is, on everyone's mind is, does it last longer? Do we have more upside in this market? Now, next week is going to be an intricate week, an important week. Why? Not so much for economic news, but more so for earnings. Bank of America on Monday, IBM, Texas Instruments, all on Monday. That's going to be very, very key. You have financials with Bank of America. You have technology with IBM and Texas Instruments, TXN. Now, the other things later this week, you have next week you have Microsoft, you have Yahoo, you have Apple. All these technology stocks are going to be reporting. Now, remember, the NASDAQ's led things. I'm going to show you the Qs chart. Let's look at the Qs. The Qs on the daily. Check this out. Look at this move. Low to the highs here has just been a tremendous move, over 30%. Now, it hasn't quite hit the 200 moving average, so it'll be interesting to see if we get a little bit of a spike up to take that, or are we hitting resistance now, and do we need a pullback? Anytime you see a move up like this, you have to be looking a little cautiously on continued upside, and I would caution everyone out there, without going into too much detail, that you do want to watch, and be a little cautious. Could we go up to the 200? Absolutely. Are we due for a pullback? Yes, we are. Now, going back to the spiders chart on the intraday, folks, just to talk a little bit more about Friday, there is a trend line here I want you to watch. Notice this trend line that scans all the way back in white, that's slanted and angled all the way up. Notice how ever since, and I'm going to go back even further here, alright, if you take the low going back to the 15th of April and connect it through the lows here, connects right through here to this point where the market taps on it before breaking higher, and then continue up right through here. You see the low area, and you continue that line all the way up. Notice how current times on Friday it hit the lows, didn't break lower. Again, hit the low right here, didn't break lower, and then pierced it on that final candle on Friday, but held. That's telling me there's a lot of support on this white line. If it should break, you probably have a decent fall in this market. Alright, as long as it holds that line, though, you're going to have a support line there, and the market could trade higher. So watch that one on Monday. That should be something very interesting to watch in the coming week in this market. In addition, folks, a couple other lines, and I want to show this one because it's going to be a very, very good one as well. Obviously, this upper 87.75, 87.65, anything up to really 88 is going to be resistance on the spiders here going forward. So you're really near it. We closed at 87.08. Anywhere up to 88 will be a lot of resistance. You break that resistance level at 88 on a closing basis on a daily chart, you could see some more upside. But I am speculating that you may have a lot of trouble, as I refer to it as the Great Wall of China for a reason, all right, folks? So keep that in mind. Very, very intricate here. The timeline could be telling us there could be something on the horizon. And again, those with the research center obviously know whether or not we've taken any positions. Are we long? Are we short? And you guys can all go join that research center by going to inthemoneystocks.com. With that research center, you get the daily market reports, the nightly videos with technical analysis on the markets, on gold, on oil, on the dollar, on individual stocks. 30 to 35-minute videos recently on technical analysis because there's just so much to cover. All right. In addition, Pro Trader watch list. Technical tactic video, hidden gems, so much inclusive in that research center. You might want to check it out. I do strongly suggest at least looking at it and see if it's something that sounds like it could be beneficial, because our goal, folks, and this is what I keep telling all the people that are with us, and they know from experience, it's to teach people how to fish, not just give them a fish. We don't believe in the nonsense of giving someone a fish. We want to show you so you can go off and fly on your own. Do it for yourself. Explain why a chart did this, why a chart did that, what's the target on this chart. Even if we don't do it, you can be able to do it for yourself. And that's really the essence of being a true educator in this market, because for too long, Wall Street just kind of told everyone and everyone listens. It's time to now learn it. Do the learning. Do the analysis yourself. It's not that hard. Yes, it takes a little while. It takes dedication, but everyone should be able to do it. Now, again, folks, I want to show you something very interesting here, and this is the final thing I'm going to show you guys on this chart. Look at this trend line that's been forming from the lows. This is the 120-minute chart. Here's the low in early March. You take that low, connect it to the secondary low, and scan it all the way up to the lows here on the 31st of March and continue it up. Look at this major white trend line. Now the question is, what does that mean? What does that mean? Obviously, it's major support, so we have to follow it, but does it mean anything more? We're going to discuss that in Monday's video in the Research Center and in the chat room this week, so come join, folks, and take care. Have a wonderful weekend.